Our next guest profited from one of the most infamous plays in the financial meltdown. Bill Ackman is an activist investor, founder, and hedge fund manager at Pershing Capital Management. His 6-year battle with MBIA is the subject of a book written by Bloomberg's Christine Richard. You can see it there, Confidence Game. Bill Ackman is with us now in the newsroom. Bill, so glad you came in.
Thanks for having me.
Congress is debating reform. It's a very hot topic. What is the one thing that you think should be written into legislation and stuck to? I mean, would it be about leverage, which was essentially part of the MBIA story, that 140-to-1 with no money there if something went wrong, which it did? Would it be about the ratings agencies? What needs to be written down?
I think the most important thing is that capitalism is allowed to work. And I think there's a provision in the bill which allows for the takeover of banks, when the government steps in, takes over the operating subsidiary, provides it some financing, and where the losses, when the institution is ultimately sold and the holding company is liquidated, the people who took the risk bear the loss in proportion to their exposure and their hierarchy in the list of claims in the company. I think that is, when you have a situation where people suffer the consequences of the risks they've taken, they'll be more cautious, they'll be more careful about stepping in quickly or replacing management or a board if an institution is taking too much risk.
Almost looking at a traditional hedge fund structure where it's really your money at stake and your partner's money at stake.
Sure. You don't want the government coming in and subsidizing one class of creditors over another. I think it leads to moral hazard and other issues. And I think the concern during the credit crisis was, could they actually let a bank, after Lehman filed, and the consequences, I think they were afraid to let a financial institution go down. And I like the idea that when people take risk, they suffer.
They're either rewarded or they suffer, depending on how smart they're.
So I like Sheila Bair's resolution regime. I think it makes a lot of sense.
Something that came up a lot in the book Confidence Game was obviously this battle that you had to fight with the ratings agencies. Should anything be written into law about the way that they're regulated, about the role that they have?
I think what's happening to the rating agencies now, I think, will make them better. All the litigation.
Because right now it looks like they're still functioning as they were before the crisis.
I think yes and no. I think they're much more careful to, if they have a point of view, to make sure they bring it public as quickly as possible. I think that I actually think it'd be a good thing for the rating agencies if they suffered some consequences for bad opinions. If there was, one of the problems is when you have an institution.
Criminal consequences?
No, but when you have an institution that is allowed to write opinions that have enormous market impact, but they have no economic, they have an exemption for free speech, it can create some problems. I mean, rating agencies, in my view, during the credit crisis, acted effectively as underwriters. Deals could not get done without their imprimatur.
You explained that farcical relationship, or Christine did anyway, in the book, in the battle with MBIA.